Hello, 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 and welcome to the Money Principle channel. I'm Maria, your host, and today I have a very rare treat for you. Michael Taylor, my guest, and I will be discussing ISAs. Now, we all know that ISAs are not particularly exciting. In fact, they're about as sexy as a slug, really. But what we will try to do is to jazz it up for you and to make it as interesting as we can possibly do. Now, Michael agreed to do this with me because he's been very successful in building a low six-figure portfolio, ISA portfolio in about 6, 7 years. Right. So I believe that we can all learn from his experience and his trial and error method. Welcome, Michael.
Thanks for having me on, Maria. Pleasure.
Okay. Now, Michael, let's start by you telling us a bit about your background.
Yes, so I have a history degree as an undergraduate. Didn't really know what I wanted to do afterwards, and the jobs all looked pretty rubbish. So I thought I'd at least get a high-paying job in business or finance, and then when I worked out what I wanted to do, at least I'd have money to do it. So I took a year out, worked 3 jobs, ended up doing 2 business master's degrees, and even then it was quite difficult to get a job because in the UK having a master's doesn't actually benefit you. Instead, from the undergraduate, they look back at A levels. So in my A levels, I got 5 of them, but none of them were great. I think I got 2 Bs and the rest Cs or something like that. So not really great. But in the end, I ended up meeting a girl when I was studying in the US and then moved to Germany, got a job in recruitment, which for those who don't know is telesales. You basically call people up, push them into jobs and find jobs. And it's basically those 3 things over and over. Didn't really mind the job, but I had a bit of money saved that I'd put into a tracker fund. And I thought I could do better than the tracker fund by doing it myself because the interest rates were at the time they were quite low, but the inflation was above the rate of savings in the bank, which is often the case. So I put some into a tracker fund, started doing it myself. Turns out I could do better than the tracker fund, which was, of course, beginner's luck. And the market at that time, 2016, was incredible. All you had to do was just be long, which is, own shares and they would go up. So it wasn't really that difficult. Made a lot of money, lost a lot of money, decided to learn how to do it properly, and still doing that today.
Thank you. Thank you very much. Now, before we start talking about ISA specifically, let me ask you, is investing in your blood? Did your parents invest?
No, no, they didn't invest. My gran had a brother who was quite into shares, but I didn't really meet him that much, so nothing ever rubbed off on me. I didn't have Bloomberg on the TV as a baby or anything like that. It was just, I think one of the thing that interested me most was, so I would have been 16, 17 when Northern Rock went under, and I
Mm-hmm.
just remember reading the shares had jumped 25% in a day. And I thought, I mean, that's crazy. Those sort of returns, if you could understand why that happened, then you could make a lot of money. So that appealed to me, but it wasn't until several years later that I actually started learning myself when I had more money.
Okay, thank you. Now let's move to ISA.
Yeah,
What ISAs do you have?
only stocks and shares, ISAs, just
Okay,
because I don't see the point in cash ISAs. You could put it in a high interest savings account, and yeah, this is what I do for a living. So stocks and shares ISAs.
okay. And how many ISAs do you have? Does it
Um,
fit? I'm asking you because a lot of people get confused around the rule of how many ISAs can you have of the same type and how many ISAs can you have, right? They don't
Yeah,
realize that you can hold any number of ISAs, but according to the present rules, you're allowed to contribute to only one ISA of particular type in a tax year.
exactly. Yeah. So you can
So
open a
how many?
new provider every year. So at the moment, I've got two. My wife, which is our money, has one. So basically, I've got three.
Okay. Thank you. And now I already told our listeners that and viewers that you have managed to build low six-figure ISA portfolio within
Yeah.
7 years roughly. But so how can you estimate very roughly how much is the growth that you achieved? And
Um.
while you're at it, you may wish to tell our viewers the specific way in which you use stocks and shares ISAs because they can be used very differently. How do you use them to build wealth?
So I just use them as trading vehicles. So I will put money in and just trade it. I don't invest any money. That's long term. What I do is anything from seconds, minutes, days, weeks, maybe months. It's very rare that I would have a trade running for more than 2 years, although I have one open now that's been 2 years. Um, so yeah, I'm a trader, not an investor. So I'm looking for quick moves or moves that are going to outperform the general market. And because you can take money out, I think I've taken. So I stopped contributing to an ISA in. So I stopped working in 2016. So that would have been the last ISA top up. But I've definitely withdrawn a couple of 100,000 from ISAs since then. As for the growth of all of which is tax free because ISAs are tax free, which is another benefit of them. But at one point, I had 20 different accounts, ISA, non-ISA, spread bet, CFD. So I don't track my actual returns in because I would have to time weight them because I'm
Yeah.
taking money out and that money's then out of the account and it might stay out for a few weeks and then I might fund a placing, so I put the money back. But I'm aiming for 20% a year, which has been comfortably achieved. You know, one year I think it was 2021, I had 100% year, but that was with leverage. So I was 150% invested most of the year. And that was a crazy year anyway. The last 2 years definitely haven't been 100%, but on average, I'm aiming for 20% a year. It doesn't really sound that exciting, but you know, Warren Buffett has done 19% on average, and he's done certainly a lot better than I am. So I'm happy to just, you know, I'm not looking to get rich quick. I'm looking to build wealth slowly, and you know, as long as I keep doing that, I think should be fine.
Yeah, that is good. But just to confirm for our viewers and listeners that you actually trade within the stocks and shares ISA, because that is
Exactly. Yeah.
another thing that a lot of people don't realize that ISA is this beautiful wrapping paper around an investing vehicle where you can do a variety of things, including trading stocks and shares within
Yeah.
it, right? And the beauty of it is that you don't pay tax on gains.
No, you don't
Right?
pay
Or
tax on
drawdowns.
anything. Yeah.
In any other account, in GIA, general investment account, you will pay
Yeah.
tax on the gains. And our
Yeah.
government is quite getting quite greedy with the small people and not so greedy with the big people. But now,
Well, of course. Yeah.
yeah. But so now, uh, can I ask you, what are the main features of your ISA wealth building strategy? Right? How do you use
Yeah.
ISA within your portfolio to build wealth? And is it specific? Because you said you have a lot of different accounts actually,
Mhm.
right? What is
Yeah.
specific?
So, one thing that I do have to be aware of is For example, if I am trading very short term, so for example, yesterday I traded Anglo American, which is a FTSE 100 company, there'll be a 0.5% stamp duty on that, and the commission will be low, but you have to pay 0.5% stamp duty. So typically, I would do that trade in a CFD, which is a leveraged account.
Yeah.
Doesn't have to be. So, for example, if you've got £100,000 in a CFD account and you only open exposure to £50,000, you're not actually leveraged, but it is a leveraged product where you put capital up front for the position. But I would typically do that in a CFD account because for me, trading commissions are quite low. And I can be in and out for less than 20 bips.
Yeah.
Whereas with the stamp duty, I'm paying 50 bips and commission on top.
Yeah. Yeah. So
But
basically,
for longer term holds, and AIM shares,
yeah.
it works out quite a lot cheaper because you pay one set of commission and that's it, because there's no stamp on AIM shares.
Yes, because you pay only spread, don't you? With the ISAs, you pay only management fee and spread.
Yeah, exactly. So with the ISA, it's commission. Yeah.
Yeah.
Mm.
Yeah. Right. So I think you touched on my next question, but I will ask it anyway because you may remember about something else. So how do you see the role of ISA in your overall wealth building strategy and wealth portfolio, investment portfolio?
So for me, it's like long-term things, and if I need to withdraw money, it's tax-free. So, but in terms of the overall strategy, it's just another vehicle. So, as I say, I use SpreadBet, CFD, ISA, but certainly anyone getting started in trading or investing should be maxing out their ISA before they even look at CFD and SpreadBet. Because those products, they are dangerous. Most people lose on them. They don't have to be if you know what you're doing. But, generally, I think people shouldn't move on to leveraged products if they can't, unless they've got like at least a year's worth of profitability under the belt. Because, if you can't make money on the money that you've got, why is taking a leveraged product, why is that going to make it any better? It's not. So for me, spread bet is probably a bigger part at the moment, because I can leverage, I can go short. We've been in a bear market the last 2 years, so you can't short in an ISA, which is one disadvantage of it. But if you were just buying shares, then ISA is the best place to do it.
Yeah, thank you. And basically, just for the jazzing up part, I will have to say that from my point of view, my ISAs, my stocks and shares ISAs, because I agree with you on the cash ISA, it's a pretty pointless instrument, really.
Yeah, I agree. Yeah.
So my stocks and shares ISAs, I see them as the pack mules of my wealth building strategy, right? They don't get you wealthy very fast, but if you are not very stupid, as Munger used to say, if you try not to be stupid with them,
Yeah.
they usually make you money, right?
Yeah. Yeah, absolutely. So whenever my friends ask me about trading or investing, or they look at some crazy coin or whatever, I'll usually just say don't bother unless you want to take it very seriously. Just open a Vanguard stocks and shares ISA and buy the S&P 500, and then you've got access to some of the best companies in the world, and there's 500 of them, so you're well diversified. Obviously, if US underperforms against other countries, then that's a risk. So, maybe add world in there if you were so bothered. But if I was doing it myself, I would do S&P 500 because, trading shares takes time. There's a full-time job for me. So, and it's got to be treated as such if you're going to take it seriously.
Yes. And now, joy of joys. I guess what I have in my Vanguard account. SP 500 USIR.
Yeah.
The
Good. Yeah.
the WUSA fund, right? And why? Because I treat it as the pack mule where I contribute every month and it does its job. Also, I have a very nice graph of what the SP 500 would have done retrospectively. And over the whole 20th century, it would have lost considerable money only around the Second World War, right?
Yeah.
And basically, even around the Second World War, if you panicked and took your money out of the index in, I don't know, 41, you would have lost 70% of your wealth, what you put in
Yeah.
it, right? But if you waited until 48, it would have recovered, even
Yeah.
after the Second World War, which is kind of astonishing thing to know, because this de facto means that if you play the long-term game with an index like the SP 500 of USA, you can't lose what you've put in. You might not make an awful lot, but you're
Yeah.
not going to lose,
Yeah.
right?
I mean,
And
nothing's ever guaranteed, but in general,
yeah,
I would agree. Yeah.
of course, it's not guaranteed, because if there is another world war, we will lose. But I bet that if there is another world war, our index fund, our index fund is doing, will be our smallest problem, right?
Yeah, exactly.
So worrying about our index fund when the world is burning is probably not what we will be doing, right?
Yeah,
So
yeah, exactly.
lesson: open a Vanguard ISA if you don't have one, stocks and shares, and buy WUSA in the first instance. Then you can buy
That's what I would
small cap,
do.
right?
Yeah.
That's what
Obviously
I've
not
done.
advice because I'm
Yeah.
not a financial advisor, but
No.
certainly
That's our
that's what I would
opinion.
suggest to
You
do.
see,
Yeah, my
we have to
opinion.
be very clear about it. Neither of
Yeah.
us is, and this is our opinion, but it is tried and tested opinion,
Yeah.
because I told you I did a bit of buying shares, and it takes over your life. So you either say,
It can do,
this is
yeah.
my life,
Takes over my
or
life, that's for certain.
yes, but you're doing it full-time professionally, right?
Yeah.
So anyway, so now tell me, how did you select your ISAs? What pointers did you use to select them? What was important for you?
Yeah. So when I first started, I didn't have a lot of money. So, and the most common account was IG. So I just opened one by chance in 2015, I think. Yeah, 2015. First I started with DeGiro, which is a discount brokerage in the Netherlands. And I got sold on the low commissions, and it turns out their spreads were so wide because they didn't deal within the spread with market makers.
Yeah.
That I ended up getting worse prices because the actual price of the stock was worse. So, I was saving £7 on commission, but just being way out of pocket on the execution. And that's true of most, these free brokers. That there's always a true cost elsewhere. I would don't bother with them if you were going to take it seriously. Deal with a reputable, real broker. I mean, there was one that gave you free commissions but didn't actually deal until the market had closed, so you didn't know what price you were even going to get, which to me is insane. It's a bit like having a car with no wheels. It's like completely pointless. But yeah, so I started with the Gyro. Had a Halifax one just because I thought it was a big bank, but it turns out they were rubbish. Got started with IG, and opened Killick for a phone broker. Did quite a bit with them. The service was pretty good, but in 2020, when volatility spiked and suddenly everyone was calling Killick, and usually I could call my guy, and still can. To be fair, now I can. He'll pick up within a couple of rings, and he'll bark the order across the dealer, and it'll be done. But back then in 2020, I would call, and there was a long list of tickets ahead of me, and I remember it took me 6 minutes to get filled before. So that was when I realized,
Yeah.
A broker who can execute when times are volatile is worth its weight in gold. And then they're a good broker. Killick, they're very good, just not for what I'm suited for, which is trading. They're more sort of long-term investors, things like that. Their clients are better suited for. So it's not a slight on Killick whatsoever. They're very good. Just it wasn't a fit for me. I've still got money with them, not a huge amount. But IG, you have an online platform. You can buy and sell with a click. Whereas with Killick, I'd have to call up, and I can still call IG because I've got an account manager now. But if I want to place an order directly onto the order book, I can do that, and other brokers actually won't let you do that. So HL, AJ Bell, all the others do not have direct market access. So in terms of execution, IG is just the best. And if there was a better one tomorrow, I would leave because it's business. But yeah, been with them many years now, quite happy with them. But again, if you're just going to buy the S&P 500, IG probably not the best. I would stick with Vanguard. So it depends what everyone wants to do as to what broker is best. There's no, you can get these one size fits all brokers, but better to buy a broker that's better suited to open a brokerage account with a broker that's better suited for what you actually want to do.
So yes, your main message is there is no such thing as an excellent broker in general. There is such thing as the best broker for your needs.
Yeah, so I think IG is an excellent broker. Killik are an excellent broker.
Yeah,
But if
but
you
they
want
may
them
not be
for
for everybody.
exactly,
Yeah.
yeah. So if you want it to do something that it's not specialized in, then yeah, absolutely.
I remembered I want to ask you something else because a lot of people, especially young people, have started going with platforms like Robinhood and equivalent. Robinhood is just the biggest, but they are
Yeah.
operating in the UK. How do you feel about that?
I personally wouldn't use those because, as I said, there's always a cost when something's free or cheap. And in the case of Robinhood, they're selling order flow to market makers. But I mean, if you just want to have a gamble around and learn how to press buttons and see what it's like with, a small bit of money, then Robinhood's probably great. But if you're going to do it seriously, I can't imagine that it would be great. I've not tried it myself. But yeah, none of my friends and people who do this seriously like me would even look at Robinhood. So basically tells me what I need to know.
Yeah, but now before we go any further, I have to tell our viewers and listeners as well that one of the guys who started Robinhood is Bulgarian. So he's kind of,
Okay.
he is one of the people coming from the place where I came from a long time ago.
Mhm.
But the reason they called it Robinhood was because they aim to democratize investing. So the kind
Yeah.
of fractional shares is their selling point. But at the same time, you're right, it is for amateurs. It is for people who don't have much money and want to build a little bit kind of savings or something, because
Yeah.
they keep enormous control over what they do with your account. They
Mhm.
can freeze your account, stops your shares, prevent you from selling your shares, whatever. So I agree with you on this one, right? And
Yeah.
the other operators that are cheap or offer fractional shares operate in a similar way, right? So
Yeah.
not for serious investors.
Well, yeah, I think there was that issue with GameStop, wasn't it, where they
Yes.
needed more margin,
Yeah.
and therefore they needed more capital. I'm sure if I don't believe it was a conspiracy, I'm sure a lot of people will say it was. But basically, if the risk of a broker is getting too high, the prime brokerage, who is, funding that, will want more capital on
Yeah.
account. I mean, that's just
Yeah.
normal,
That is
right?
normal. No, I do.
Happened to IG a couple of years ago, when their primes said that to they want to increase both the commissions and the capital on account. To get around that, you can become a professional, which means you need to be at least 500,000 net
Yeah.
worth,
It's
liquid.
500,000. Yeah.
Yeah, do a
Yeah.
certain amount of trades, and then you can desegregate capital. So some of my capital at IG is desegregated, which means if IG goes under, then that money, I can't claim that back under the FC,
No,
the
of course.
Financial Services Compensation Scheme. So it is risky, but you can desegregate specific accounts. So I think I've got like 10 accounts in IG alone. Not all of
Yeah,
those are
because
desegregated.
then you can look to take some of the money between providers because it is 85,000 per institution.
Exactly.
So you
Yeah.
kind of, and this may probably leads us well into the next question, but I also seem to remember that a lot of platforms, including FX trading platforms, had the
Hmm.
same problem with liquidity when the Swiss franc was playing silly buggers.
Yeah, I could
Yeah,
imagine that
yeah, yeah,
probably
yeah.
was the case. Yeah.
Absolutely. And with the Swiss franc, of course, a lot of people lost an awful lot of money.
Yeah, there was there was a broker sponsoring I think was it West Ham United that year. I mean this was I only know this because a hedge fund manager friend told me, but it went bust. And yeah, that move killed a lot of people.
No, and a lot of
In some
smaller
cases
investors as
literally,
well. Yeah.
because they took their own lives because of it. But yeah, that financial markets are risky,
Yeah,
unfortunately,
but
and
then
these
at the
things
same
happen.
time, there are rules, and we're moving into them. So the rule with the Swiss franc would have been don't bet on currency that is state regulated, right?
Yeah.
Because if you leave it to the market, it will even out. You may
Mm,
lose some, but if it is state regulated, one decision and you lose everything. And the worst thing is you can't read the signals for this decision.
yeah.
Right? With markets, you can have systems and analysis tools that can read signals, and it may be slightly off, but you can
Yeah.
pull with
That's exactly what happened when George Soros, they
short, short.
say broke the Bank of England. Yeah,
Yeah, yeah,
the Bank of England was propping up the pound
yeah,
with unlimited money. Also, they thought it was unlimited money. George Soros thought it won't last and just shorted it and
yeah.
shorted
Yes,
it.
yeah,
Eventually, the Bank of England pulled the bid and it
yeah.
completely crashed.
Yeah, and
So
George
yeah,
Soros became
same
a
type of
very
move.
wealthy man.
He did, yeah.
Yeah,
Um, yeah, but what's interesting is one of his proteges, Stanley Druckenmiller, he realized that if the pound crashed,
it will
then
go up.
investors would, but not, that wasn't his trade, but he realized that investors would move from the pound to the Deutschmark. So he actually bought the Deutschmark really heavily and did the same trade as Soros, but through a different instrument.
Yeah.
So, and also I think made $1 billion on that. So, yeah,
Yeah,
good for him.
no, that's not a bad thing. Now,
Yeah.
you see the rules and kind of how you read signals and stuff. And basically, let's face it, in investing, the only thing you can do, because reading signals can be dodgy, there are signals you can't access, you always play and invest in within certain level of uncertainty, right?
Yeah.
Now, certain level of uncertainty was a bit kind of American military phrase
Mm.
on my side. But so basically, we all know that the only way to hedge against this is to diversify, right? And diversify
Can
properly.
be, yeah.
Yeah, can be. So it may not be applicable to you, but do you diversify your ISAs and how do you do it?
So I actually wrote an article in the Financial Times last April and basically said that 10 holdings was enough for a private investor to diversify, and
Yeah.
the suits really didn't like it.
No?
But no, they didn't like it. No, probably because I was saying that they could do it themselves and they don't have to pay their expensive fees. Um, but for example, if you've got 10 special situation stocks, you could have an oil miner in Angola, for instance. You might have a consumer products company in the UK, and you can pick 10 stocks that are not necessarily going to correlate, but it's more company, they're driven by company specific factors rather than the actual, the rising tide of the market. I mean,
Yeah.
it's great if you do get that, but ideally you want to pick stocks that have high beta and are going to move because of the actual stock. And that way you can sort of diversify in that instance. But yeah, it depends what level of diversification you want to go to, because you could then say, well, I've got 10 UK stocks. What if the pound crashes? Or, should I be investing in the world? But for me, I can get the diversification I want in UK equities alone.
Okay. Now, if you were starting again, would you
Mhm.
do anything differently? And what?
Um, So when I started, I just read a lot of books and watched a lot of YouTube, and that helped. But because it was so easy jumping on things that people on Twitter had posted or finding hot stocks and just taking a piece of the move out of them, that worked really well in a bull market until it didn't. And then I lost a lot of money and had to learn how to do it more methodically. Would I do anything different? Um, Honestly, I can't say that I would, because building that account, even though at the time I didn't know it wasn't sustainable, but it allowed me to grow, a big enough account to then do this full time. So yeah, my advice to anyone starting out would be to learn a lot, learn fast, don't lose a lot of money at the start. Um, because when you are new, it's very easy to lose lots of money, and just take it slowly. Um, because if you can learn this skill, you could be doing it for the rest of your life. And it compounds. So yeah, that would be what I would say. But of course, I was no different. I wanted to get rich quick. Found out it doesn't work. So yeah, when you learn that, you either quit or you carry on learning. And yeah, I was the person who wanted to carry on learning.
Thank you. So, what do you think are the main kind of pitfalls with ISA investing that people should watch for? What are the mistakes they can make using
Um,
amount of
not
ISA?
not using the full allowance and putting it in. So, for example, I would not. I don't understand why someone would put money into a cash ISA. Um, you should, in my opinion, be putting it into a stocks and shares ISA, and even if it's just buying a tracker fund, as long as you don't need that money anytime soon, say 5 to 10 years, then the chances are it's probably going to grow. Of course, not always, but yeah. You can't short in an ISA, which again, unless you are sort of a seasoned trader, you shouldn't be shorting anyway. You can buy the SUC 2, which is a vehicle that mimics the FTSE 100 short. Personally, I think that's a bit rubbish because it rebases every night and you lose a bit of value. A much cleaner way is to spread bet the FTSE 100. But, we're talking about ISIS, so I won't digress onto that. I think the only disadvantage is you can't actually short, but for investors who are mainly long, I don't think there is a disadvantage to it. There is the LISA, the lifetime ISA. That counts as part of the 20,000 allowance. You can put 4,000 in, and the government gives you 25% a year free, completely free. The disadvantage with that is that you can't withdraw it until I think you were 55.
50. Yeah.
Unless you were terminally ill or you're buying your first property. But yeah, if you haven't bought your first property, that 4,000 every year should be your goal, because that is free money. 1,000 every year, and then your spouse can open one. You're getting 2 grand a year free.
Yeah.
So
And it builds up the deposit nicely.
exactly, yeah.
Yeah.
So
So you think
yeah,
it's a great instrument, actually?
yeah. I think it's a great instrument. I mean,
But
my
the
wife
stocks
and
and
I have,
shares ISA and the Lisa.
yeah,
Yeah.
yeah. I mean, it's so good. We've looked at moving abroad, but like the tax situation in the UK for us, I don't pay tax on most of my earnings because the ISA is just tax free. So
Yeah.
there's not really much point. I've got a friend who's just moved to Dubai because of the tax, but I looked into it. It's not actually going to make that much of a difference for me.
Yeah.
So there's no point.
Yeah.
It really is great.
Let me ask you the $1 million question,
Yeah.
right? When do you expect to become an ISA millionaire?
Um, I don't know, because I use the ISA to withdraw,
Yeah.
and we've got a small property now which we use as a holiday home, but eventually I'm going to want to buy the real home, and because I don't earn very much taxable, that I just can't get a mortgage. So when it comes to buying our sort of forever home, then I will need to pay for that mostly in cash,
Yeah.
probably all of it in cash. So yeah, and that depends when we buy. So
Yes.
yeah, I've got no idea.
But so that our viewers know, there are about 4,500 ISA millionaires at the moment in the UK.
Yeah.
And they grow, the number grows every kind of day and month. Now, the interesting thing about these people is that they're generally in their late 60s or 70s. They started investing in the previous scheme, which was PEP,
Yeah.
right? And all they did was they invested regularly over a long time. So I suspect for you, it will be very different. But for the normal kind of people who want to invest a bit in stocks and shares ISA, without exception, these people have stocks and shares ISAs, right?
Yeah.
There isn't a single ISA millionaire who holds a cash ISA.
Well, it's pretty.
Yeah.
It's not impossible, but it would have been impossible
I think it is probably.
Yeah.
Because at 0.5% interest rate, which was for most of last decade,
Yeah.
you end up only with the money you put in, right?
Yeah, it wouldn't have been possible, I don't think.
Yeah.
So far.
But anyway, so that is kind of the statistics. Anyway, my last question.
Yeah.
What are the 3 pieces of advice you'd offer people who are just starting out to invest in ISA?
Only put in what you can afford to lose. If you are maxing out the 20, or you want to max it out but don't have the money just yet, what you can do is with IG, it's a flexi ISA. So on the last day of the tax year, you put in what you want to carry over. So let's say your ISA allowance is, well, it is 20,000. You've put in 10. So you've got 10, but you need the money and you can't deposit it right now. What you can do is put it in, and then it'll be in the ISA. So you filled it up to 20. Then the next day, which is the new tax year, you take out the 10. So the 10 is only in the account one night. And then not only have you got your new ISA allowance of 20,000, but you can also replace what you took out in the same tax year. And because you put it in the last tax year, carried it over into the new tax year, you withdraw that 10, you then can replace that 10 along with the 20. So giving you a 30k allowance, you can essentially carry over your ISA allowance. Now, not all ISAs can do this. Not all of them are flexi ISAs, but with IG, you can. I mean, not that it matters to me because I don't actually contribute to ISAs.
Yeah.
But
That's very nice. That's very nice.
And the third one, the LISA, absolutely got to be using it. 25% a year free is insane.
Yeah. Now I remembered also something. It didn't used to be the case, but most ISA providers nowadays allow you to contribute cash to a cash part of your stocks and shares ISA. So basically, this makes it easy to do dollar cost averaging because it doesn't apply to you, but people who just invest in indexes or ETFs or this kind of basket investments, doing dollar cost or pound cost averaging is important. So basically, what one can do is put money they have in the cash part, and then every day on a Thursday or something, they distribute some to their funds. Ideally, few funds, not many. And it can make enormous difference.
Yeah. I guess I probably should have mentioned that as well. Yeah,
No,
you can.
I love the cash function, and not many people think about how helpful this actually is, right?
Yeah.
So
Yeah, direct debiting and having an automated payment is great because especially in a bear market, I remember when it was 2020, some people were saying, "Oh, the market's fallen. I'm not going to put any money into my ISA anymore." That's exactly the time you should be putting
the
it in.
best sales ever.
Yeah.
I
So
never
if
go
it's
to
automated, you
Christmas
can't
sales,
do it.
but I bought a lot of stuff when the market fell,
Yeah.
right?
Yeah.
So It's but the dollar cost averaging thing is good because you don't, the market fell and I managed to get stuff in my ISA while it's low. It's
Yeah.
relatively rare. But then the dollar pound cost averaging ensures that you do it irrespective of what happens to the market, and statistically you end up ahead.
Mhm.
Right?
Absolutely.
It's a matter of statistics. That's why it's a pack mule, because there's no kind of skill, timing, nothing. You just do it regularly without fail.
Yeah.
With how much money you have, right?
That's
Anyway,
the best way.
thank you. Now, Michael, before I thank you for having this really nice chat with me, actually,
Yeah, it's been a pleasure. Thank you.
is there anything you would like to add? Is there anything I've forgotten to ask you? Any words of wisdom for our viewers?
I don't think so. I think we've covered quite a lot. I mean, ISAs are great. As I say, I live in the UK because they're so great. But yeah, if people would want to learn more, your site is there, my site is there, shiftingshares.com. Just question what people are saying. There's a lot of charlatans out there. There's a lot of, I don't understand how financial advisors can be called independent when they're getting commission from the products that they recommend.
Yeah.
I don't understand that. But there's no harm in speaking to a financial advisor. Again, personally, I would just put everything into S&P 500. But if you've got more different needs, or you were worried, then speak to a reputable one.
Okay. Thank you. That was lovely. Thank you very much. Good luck in your
Thank you.
trading.
Thanks a lot,
And
Maria.
hope to speak to you again soon. Thank you.
Yeah. Take care. Thanks.
Bye-bye.